Great. Well, welcome everybody. It's really exciting to put on this webinar related to building trust between marketing and finance. And you're always kind of wondering with marketing spending the money and finance on the other side, maybe trying to save it, like how do these two departments really get along? And successful organizations have figured it out. And we have today 4 panelists that have experience with that. And we are going to have a really unique format we call the fireside chat, where we have a marketing executive talk to their finance counterpart. And hopefully you'll get a lot of learnings out of it. And we'll get going on that in just a minute. First, I want to kind of touch on what the ANA's Business Marketing Minnesota group really does. And not all of you, maybe this is your first event with us, so I just want to kind of go over it. What we try to do is we facilitate B2B marketing conversations. And we've done that for quite a few years. And at this moment, we have done this remotely. Previous years, these meetings were in person. We have made the rounds from breweries to pinstripes to locations at companies, and have been really fortunate to get great turnout, and people have a chance to not only get educated but also network. This year was, of course, a little bit a different year, and we were planning a marvelous event in April at Cambria downtown. We delayed that, and in June decided, let's just keep forward with the plan that we had, but we just do it as webinars. So in June, we did a really, really interesting presentation on business development representatives. And we did that together with the Association for Inside Sales Professionals, and we call it BDRs, or a BFD. In August, we had 3 CMOs share their success story and how they got to the pathway to CMOs and what their advice might be for people that are maybe on track to that, or maybe at the very early part of their career. In September, we did Cutting Through Noise, Developing Effective Digital Content. And this was more the creative side of us. How do you break through these days when there's so many messages out there? And then today, we'll talk about the relationship with finance. Good time of the year, we're in the middle of budgeting, and how do you build trust between marketing and finance? How do you get approval for additional projects that you're envisioning? And what do you need to know about finance? And how do you strike a relationship to make that successful? So I really look forward to that. I do want to thank our sponsor for today is Shermer, and I'll give Chris Shermer the chance to kind of chime in on this topic between the two pairs, probably around 8:45. But I do want to thank Shermer for their success, for their sponsorship. Also want to congratulate them on their success. They have been, moving brands to, from to revenue for many years in the Twin Cities, and this particular year has been extremely good for them. They not only became the runner-up for B2B Agency of the Year for the ANA's group. This is 4 years now in the last 6 that they have been a runner-up, and mind you, this is a nationwide award. So really, really great. They have been recognized this year too for a website, got a wonderful award for that, and as well as for a demand generation campaign, the B2B Marketing Elevation Awards got a silver award for that. And locally, they were called the Best of Business in the Reader's Choice winner. So Chris and his team have done just a marvelous job. Great influencer in the Twin Cities, great supporter of our group, and we appreciate it and look forward to him chiming in a little bit. This will be the agenda for the next hour and a half. At 8:10, we have Laura Schreier and Tatum talk from Blue Stem Brands, and they are working together there and can share a lot on how their relationship has evolved and what marketing can do to strike up a better relationship there. Then it's time for Q&A. And like I said, this used to be a in-person meeting. We had a lot of networking, we had a lot of interaction. It's a little harder to do that in a webinar format, but we really encourage you, send some notes in the chat, send some notes in the Q&A box, and we'll address them and spend the time. And both Laura and Tatum will be able to do that at 8:40. And then we'll be followed by Kelly Olson and Sylvia Ranga. And another great setup, I'll have them introduce themselves shortly, but another great setup. And we'll cover some different angles there, really getting into maybe marketing technology investments and branding investments, and see how you know, finance thinks about that, and how the relationship will evolve from that standpoint, followed by some Q&A. And at 9:30, we get you back to your day, and hopefully with a lot of good practical tips to benefit from when you go through your budget season. So as I said, use the Q&A box. We really like the interaction. We are sensitive to the fact that it's a little harder in the webinar format, but we like to hear from you, and we'll definitely address each and every one of them. Also, if you're wondering, and you saw the schedule that we had this year, and you're wondering like, hey, how can I be involved making people aware of these wonderful events? We do have an open board position. It's a communications chair. And this is through social media, public relations, get the word out about our wonderful events, and keep driving marketing professionals to the association and learn from each other, and learn from the great panelists. And we are continuing into 2021. We will have quarterly educational events. We're also hoping with everything hopefully going into the right direction, that we'll have some social events, and those are being planned here over the next few weeks, and you'll be hearing from that since you are now on our mailing list. So we'll keep you posted. And with that, I like to kind of share our four wonderful speakers with you. And maybe Laura, if you could start introducing yourself, and then we'll go kind of from left to right on the screen and have everybody do this. Thanks so much.
Absolutely. Good morning, everyone. It's great to be here. Laura Schreier, currently the Vice President of FP&A at Bluestem Brands. Tatum and I work with the North Star side of our business, which Fingerhut is really the primary brand that we service and support, which for local Minnesota people, that brand goes back long and deep. Actually started my career at Metris Companies, which was a general purpose MasterCard issuer, which was ironically a spinoff of Fingerhut. At the time, it was Fingerhut Financial Services turned into Metris. So I've spent pretty much the entirety of my career kind of working with that Fingerhut brand, but a lot of twists and turns along the way. So I've been with Bluestem Brands for 14 years, again, in FP&A, doing all sorts of different support functions. So the key thing with our Fingerhut business model is it's a direct to consumer, originally kind of more of a catalog specific company, but now we've made a big shift to digital. But the thing that makes Fingerhut unique is that the vast majority, 98% of the customers buying product from us are doing it on our credit product. So for us, it's really more of a triangle relationship when we talk about budgeting and trade-offs between credit, marketing, and finance. So that's a lot of where my kind of time goes, is working with the various teams on how we navigate all of the aspects of our business model.
All right, hello, good morning. I am Tatum Marinkovich. I have been with Bluestem for about 20 months since spring of last year. And prior to that, started my career at Jockey International. So started my career in the men's underwear business as a product merchandiser there. And then wanted to move back here. So started working for Polaris and did their apparel product line as well. After B school, I had more of a CPG background, so spent most of my time at General Mills and had kind of that traditional CPG training there. And then I was at I left the workforce for a couple of years while I had a son who was born sick, and so needed to focus on family and the work, focus on that. And I came back into a startup. So went from kind of quite large organizations and mid-sized organizations to a business that simply had a product and no sales, and built that product brand up, which is called Clean Smart. It's a local disinfectant that is essentially, since I don't work there anymore, I can use the non-EPA term. It's essentially safe. And it's, so worked on that and got that business into stores. And then went over to Halo Innovations, which is a local baby company. Worked there for starting in marketing, and then was made president. And then through acquisition, we had another business, Aiden and A, and became the president of both of those. So it's nice to meet you all, and I look forward to hearing your questions.
Great. I am Kelly Olson. I'm currently the CFO and the treasurer of the board of H2I Group. It's a specialty construction contractor. I've been in finance for over 25 years, and probably the last 15 years played a leadership role in the planning process or budgeting process. And before being at H2I Group, I actually was 14 years at Deluxe Corporation, where I was the corporate controller. It's a $2 billion local company here in the Twin Cities. I've crossed really industries, financial services at US Bank, manufacturing, Ecolab, started out in public accounting, CPA, CMA, and so, and a few other companies in between, but very excited to share what I've learned over the years in what I've seen work successfully with our partnership with marketing.
All right. Well, hello, everybody. My name is Sylvie Oranga. I am a career-long marketer. I have been, I've covered probably in my 20 years career every facet of marketing, from obviously all the traditional marketing channels that we all know, but also I've been in product management, overseen pretty large P&Ls when I was at Aveda and Justin's. And then I've also been more recently in digital marketing, marketing technology, and customer experience, and have spanned those skill sets across multiple companies. So I was at Aveda in cosmetics. I was in advertising at an agency called Campbell Mithun. And then I was in retail at Macy's, and then progressed to Justin's, and then more recently Prime Therapeutics in healthcare, and then much more recently Antrust, where I led the full rebranding of the company. And then at Prime Therapeutics, and relevant to this conversation, I stood up the marketing technology stack, and it kind of evolved that as well when I was at Antrust. So that's my story.
You're sticking with it. Thanks so much. Thanks for the great overview of your careers. Very, very impressive. So what we now do is we'll switch to what we call the Firesides chat, and we'll have Laura and Tatum go first, and keep your questions going, and we'll address those. But let's see if how Tatum and Laura are doing at Bluestem Brands, and what you can learn from that. Thanks so much.
All right. So, and we did rebrand these to Mimosas in the Morning. So that's not what's in my drink, though. So Laura, I'm interested to hear, and we've never actually had this conversation. It would have probably been a good question for me to ask you 20 months ago. What is the attributes that you see as being most successful when there's a good marketing and finance relationship?
Well, I've been at Bluestem for 14 years, and with that had the luxury of some pretty long-standing relationships. And all of those, I would say, were really kind of first built on just, trust and mutual respect. When you have that a good foundation, then all of the twists and turns that the business can throw at us, right, are just much easier to navigate. And typically when I think of kind of, that first breaking of the ice with somebody new, there's usually like some sort of, project or activity where it's a budget or some sort of a deeper financial analysis that has helped kind of break the ice on that, where you kind of get a feel for, where understanding how the other person's mind works, the things that they focus on, how they think through a process, a challenge, right, a business case. And so getting kind of just acclimated to really kind of understanding how that other person is thinking and approaching things makes the conversation, right, certainly a lot easier, but really a lot of it is building that relationship over time, so that you can get to a point where you kind of know what to expect from the other person. And like for myself, I don't really like to be the kind of police type of finance person. We always joke that we're there to protect and serve. So it's more of, helping each other, protecting the business, protecting the financials. And it's really, more of I view it as a service role, a support role, as opposed to kind of a true policing kind of a function. So yeah, I'm not sure, like with other, you've stepped into more organizations than I have, and probably have had that restart more often. How has that worked well for you?
It's funny because although marketer is typically has been my title, I've always considered myself a steward of the financial health of the business as well, and in a different way, obviously, than you. But I don't really see marketing's role as just spending. I see marketing's role as sustainably growing a business. And so I think that's been key, is to really kind of talk through the business in that way, about one, making sure marketing's thinking that way. And at Bluestem, that was always the belief in the way that they ran other businesses. That was sometimes a change that we had to make. But I do think that that's probably the key, is to be really aligned on those fundamental objectives. Is it EBITDA that we're all working towards, or what is the metric that we're trying to push ourselves to? And then it seems to come a little bit easier, because I think you're going to one objective versus the relationships where marketing is working towards one thing and sales is working, or finance is working towards another, can become a lot more challenging, I think.
Yeah, so especially when it comes to budgeting, kind of knowing the rules of the game and how you navigate the year, because setting the budget at the beginning is one thing, living with it for the next 12 months is another. And yeah, I totally agree with you. The Bluestem culture, marketing is a very numbers driven analytics organization, which makes my life a lot easier. You're dealing with marketing people that are just as strong in spreadsheets as your own team, versus maybe where it might be in other organizations. But we have a pretty fluid way, right, that we kind of manage through that, and it really comes down to that bottom line. You guys have a box, right, that you try to operate in, but we can make trade-offs across various places of our income statement to ultimately make sure we're hitting this year's goals, as well as setting ourselves up nicely for the next year. So having that flexibility and knowing, where you've got the latitude and where we need to touch base is really important, right? Where we kind of touch base and keep on the same page of that, so that there's no surprises when we're doing financials or, presenting numbers to the board and whatnot.
Yeah. So I know where we come in the budgeting process. Where do you start on the budgeting process?
Really, we kind of work backwards. Ultimately, we've got a date that we need to ultimately have the final answer, if you will, the presentation to the board. And things have been pretty fluid over the last few years, so there isn't a normal of the process, but definitely always knowing what that end looks like, both from a timing perspective, as well as what the expectations are on the deliverables. And sometimes, but not always, do we have very kind of explicit expectations on what the numbers should look like. Right? It always comes down to that tops down, bottoms up kind of mindset. And I think we've gotten to a pretty good point in these last couple of years where there's not just a high level kind of, here's your number and give me numbers that match it and will support that, because that doesn't do anybody any good if you're just putting ink on paper. We could do that all by ourselves without actually engaging with the business if that's all we were going to do. So it's really about having the engagement of the broader team on, what's realistic and what has, you can't just sandbag and right to start with, numbers that you're confident hitting, but having that transparency of here's, where we, can comfortably be. Here's some stuff that, we think is on the horizon that we'd like to tackle. Some of it might work, some of it might not, and just being kind of honest and transparent about that so we can collectively place our bets. But back, I guess, to your question on where we start, it's just trying to keep all of the groups coordinated. Not my favorite part of the job is scheduling the timelines and the handoffs. It's more about the meat of it, but it's always good to have strong people on your team that really are good at that type of thing, because I prefer just to talk about the fun stuff. But finance, we're always kind of a Switzerland of sorts of trying to kind of find the balance between what the board, CEO, CFO is expecting, what the business wants, and what we can realistically do. Sanity check.
So do sales go first? Is it revenue that comes as the first part of it, or is credit and marketing at the same time starting to give you your numbers and then build it out from there?
Yeah, and for us, you guys work a lot directly with credit, and we don't get in the middle unless we need to, unless you need a kind of a tiebreaker vote, or if there's something really kind of unique and different than what we've done in the past. But credit and marketing aligning first is important because there's so many interdependencies there. So if we're going to make any big shifts in how we're thinking about credit, either loosening or tightening, that's certainly going to have a big impact on your sales forecast. And if you've got some new exciting marketing channels to pursue that might have a very different impact on what credit looks like, they're going to want to weigh in on that sooner in the process versus when you're halfway through and then you get the whoa, wait, I didn't know you were going to do that. That's not going to work. So having that first relationship, but from once you have the kind of broader strategies or again any kind of more notable shifts, it really does start with sales and everything kind of flows after that. So you guys have the pleasure of thinking about 2021 and starting planning probably well before you'd really like to, because you're so far away from having a good read on this holiday and you're already making a call on next holiday essentially. But it all starts with sales. It's all about marketing, Tatum.
Well, it's kind of sad, but I actually like the forecasting part. Now I'm not doing the spreadsheeting. So that part helps, but yeah, I love it's to me how you learn about the business and really what's driving it and figuring out what drove it this last year and looking forward to the future, how to do it even better. So to me, it's actually a fun process. I don't admit that to the forecasting team.
There's definitely aspects of it that are fun, and especially when you're taking that longer term strategic view, right? When you're looking past just the next 12 months, and as we're looking at really rethinking, significant aspects of the business and what it means for us longer term, and what that means for the trajectory, and how we again kind of find that balance between short term profitability and setting us up in the longer term for making sure we're on the right path to ultimately where we want to be 3 years from now.
Yeah. We should probably just back up and let people know more what Fingerhut does in case it's not a business that they're familiar with, because it did strike me with that credit and marketing play that maybe the listeners weren't aware of. But essentially what Fingerhut is it's geared towards customers who need to establish, build, or rebuild their credit. And it offers starts people out with a small amount of credit in order to make purchases, and over time they're able to build their credit. So that's where the relationship is, as we think through how a market or how, we have to be careful of how big we grow and how fast we grow to make sure that we're still being really thoughtful about the risk side on the customer's ability to pay that back. So that's where that relationship comes in for those listening.
Yeah, and our triangle is super interesting. So for me, that's a big part of why I've been with Bluestem for 14 years. You know, Metris was just the credit part, basically, of this customer and of this equation. So the really three-dimensional dynamic of marketing and credit, where again, it's that balance between short-term and long-term. If you want to hit sales, you know, this year, credit can do a lot of things really quickly to create a lot of sales. They're going to all charge off next year, and then it creates a different problem the following year. But we have a lot of levers, and the credit levers and the marketing levers are more often than not opposing forces. And so finding that balance is a continually interesting discussion.
Yeah, definitely. Should we talk a little bit about the free shipping and how we approach that this year? And I can give a little bit of the background, and then I'd love to hear just your perspectives of that process. And you know, and so for where we were last year, we essentially the company went into bankruptcy as of March of 2020. We are currently out of bankruptcy, so and it's been actually a very strong and successful year. So we're in the midst of a turnaround. But part of that came from us asking really hard questions of our customers, and we realized that our value prop was off. So credit had been tightening in terms of who they were giving credit to in order to make sure that we had the right risk profile on the business. And marketing did not change its practices in that time frame. And so we continued to see sales decline and our active customers list decline. And so oftentimes that was getting offset with raising prices. That's a really, really short-term and short-sighted approach. And essentially, as you can imagine, what happened is our business got smaller. And so last year we did some NPS work that really came to the height of where we help customers build their credit, where we were given a lot of credit from the customers, but where they struggled was with our value prop and our pricing overall. And so what we started to put in during Christmas last year, when we were really struggling on the business, was value prop free shipping is what we refer to. And so we basically had a minimum qualifier, and if someone purchased $200, then they would get free shipping every day instead of us having that markup. And obviously that was, it really put heavily into our discounts, and we ended up for 21 pulling it out of our marketing budget and actually putting more heavily into discounts. But Laura, I'd love to hear your perspectives on that and kind of what thought process your team went through, because that was something that your team and my team really collaborated a lot with each other.
Yeah, it was really a leap of faith. And honestly, from my perspective, I was really nervous about how that was going to go. And a lot of where my initial reaction came from was we had a smaller brand, much smaller brand, Geddington, that we had launched about 10 years ago, and that one was originally launched as with a different value proposition and a different kind of expectation of what credit risk looked like, what pricing looked like, and how the various pieces of the P&L ultimately got us to an all-in margin rate that we were comfortable with. And with that one, when we had a new CEO at the time, that we really used that as our kind of testing ground for some thoughts to see how things might react and respond with the customer versus the big brand Fingerhut. It was just a lot less expensive, the risk, the downside of it. So we went all in on that one with free shipping, and we had crunched million numbers 3 ways from, Saturday on what that would take for it to pay off. And in that particular brand with the dynamics, the hurdle was really high. And so I was always concerned that it didn't seem likely that it was going to be enough to make it work. We tested it. We went all in on that brand, and we did it for quite a while, 6 to 9 months, I think, where we went all just free shipping all the time because it was consistent with Fingerhut. That was one of the pain points. It certainly was a dynamic changing in the marketplace that we hadn't responded to or reacted to at all. But it's tough when you get so used to having all of that income in your P&L, and in the long term to survive that you have to do something different. But what it means in any given year is always such a tough pill to swallow that we never kind of made a big effort on the Fingerhut side to take a leap like that. And so for the Geddington brand, for various reasons, it didn't pan out, and we reversed and went back to where we were. And so it's kind of that once bitten, and then, are you gonna be comfortable trying it on the bigger brand? But the big difference in how you guys approach that is we couldn't afford to give up 100% of that revenue all the time. So the beauty of how you did that is we've got levers, right? So it's not free shipping all the time. You've got different offers in play, and you can pulse it on, is it $150 free ship? Is it $200? Where do you use that for existing customers versus new customers, as opposed to 100% all the time? And so with that, and having an existing customer base that was more established, that they really responded well to that, right? So it gave us a much nicer marketing touch point, where we actually, we were having a tough time, right, in 19 holidays. So it was kind of one of those times like, well, we may as well try it, because we got to do something. We clearly can't just keep going the same course and expecting a different outcome. So we, held hands with you guys and said, okay, we'll give it a go. And I was honestly skeptical, and maybe that's kind of the role of finance, is to be that one a little bit worried at the front of the bus going, oh no, look out, what about this, what about that? But it worked, and it really set us up nicely for a start of 2020, for a year nobody could have expected. And we've, from our business perspective, had a perfect storm of things that actually have all played together really well to drive lift in sales, improvement in credit performance, like all of the metrics going the right direction. We're not making trade-offs right now, not in a big way. So it's really panned out. So it's been a huge step function shift in what the future prospects are for our business.
Yeah, definitely. I think that as you said, we were desperate times, right? Desperate times, desperate measures, and the Hail Mary worked for us, which was awesome. But at the same time, I think the other piece is we didn't just support the market or just support it with pricing, right? We also really focused on our messaging to consumers and stopped talking to them about retail, where if you compare us to other retailers, we're not a great experience, but we also focused on making sure we were giving people the reason they were coming to us, and it's to build their credit. So I do think that it needed to be more than just the pricing change, but it certainly has, I would say it's certainly outperformed any expectation I had. We didn't forecast for a lift for it. We just decided to do it and see what happened, and I think we all kind of believed we might end up pulling back at some point.
Yeah,
but
holding our breath a bit.
yeah, and what was surprising to me is how much AOV lift it's driven. I mean, even when our average order value it's gone up about 10%, but we didn't necessarily, where our qualifier is, doesn't drive it a huge amount one direction or the other. So I think that's been really surprising to me, is to see that it's just helping customers put more into their basket.
And that Hail Mary approach is not normally like how we would operate, right? That's pretty extreme and out of bounds from the way we would normally try something new, right? We have a very kind of deep test and measure kind of culture. In this one, it was just difficult to do. And again, it came down to the desperate times, desperate measures. So do you want to talk a little bit more about how more normally that kind of works, that test and control, and how we really kind of get comfortable usually versus that example, kind of going into new spaces? And there's certainly aspects of budgeting that kind of ties into that as well when we're going into new territory.
Yeah. I think probably a really good example of that would be within catalog, and how we changed this year the timing of catalogs and how they line up with our credit line increases. And so the approach that we took is we tested for several different periods, different timelines where we could have put it out. And then once we kind of figured out, we got narrowed it down to 2 periods of how does a credit line increases where we give customers more credit that they can use with us. And then a catalog hits their homes typically either right before or right after, or we didn't have a really good streaming process to that in the past. So first we tried several different holdout groups and measured against those. And then once we got to the best 2, we measured those head to head. So it was about a 4-month process of just changing out our catalog streaming timelines, and then ultimately works ourselves into the best play. Similarly with digital media, we have pulled back very slowly, kind of, you know, single digit types percentages, and we put more into it as we see that things are working. And so we put a lot of rigor. Typically, that, as you said, that was our Hail Mary, and we didn't put a ton of rigor into it, but typically there's a fair amount of rigor and we move really slowly, and also try to work with credit to make sure the credit quality is holding and making good decisions on that piece too.
And the digital space is an interesting one, right? Our origins are very catalog based, and we've gotten into chunks of digital that are much more highly attributable, right, sources of names, where it's a lot easier to say, okay, if I spend this amount of money in this space, I know what I'm going to get because they're a deep, very direct partnership relationship. But then we've got these other spaces that we've been playing in, you know, over time, but you've really been exploring quite a few different options these last couple of years that get into much more of a grayer, squishier space, right? And from a planning perspective, we try to set aside money, right, to give you that latitude to try stuff. And ultimately the amount of money that you have, because a lot of that tends to be back half loaded, will depend on how the year's gone, right? If we're feeling comfortable that, you know, we've got the money to test and learn and, you know, give us some maybe new channels that we can explore deeper the following year. If times get tough, right, those are the dollars that go first, right? They get pulled back just because they're in the budget. Doesn't mean that they're there to spend, but we try to preserve the little pockets of sandbox. And I know there's a few that you guys have been looking at, you know, as we're some of the like TV stuff, the addressable TV, and some of those that are a whole new space.
Yeah, TV. This year, we didn't give them actually money to start working on the TV ad until I think it was like July 1st when we finally said, yes, you can go ahead and spend it. Or, you know, it's my team who leads it, but I kept holding back and I didn't want to spend it until I felt really good. But we did spend the money and got new creative produced, and it's in market right now. And so, but, you know, we went really small, you know, 1.5, 1.7 million spend for TV. And that's national, to just get a test over 5 or 6 weeks. And then once we understand how that's doing, we'll definitely go more broad if it's performing well for us and holding that credit quality in a good spot. So yeah, I think we're actually hit the 8:40. Is this where you wanted us to turn over to questions, Edwin?
Yeah, it's perfect. Yeah, thanks for setting it up so well. So we did get a couple of questions, and I think it's a question for both of you, but I would love Sylvie and Kelly to chime in as well, because it applies to them as well. So the first one, and you know, you mentioned, Tatum, that you have gone, you know, through a couple of different industries. So how does the budgeting for the marketing function differ between industry verticals?
I would say the biggest difference is does marketing own the revenue piece or not, or is marketing budgeting going to be about what it's spending? So I think in some businesses, marketing owns that forecasting piece of it, and so starts budgeting with forecast. And in some, sales has owned that, and marketing starts their budgeting process with just, you know, the revenue driving activities. So that I would say is probably the biggest difference. But beyond that, it's pretty similar. It's always looking at what has worked this year, what do you want to try next year, and what type of lift do you expect for that to bring you.
Okay. So Kelly, anything that you would add to that?
Yeah, I would echo. I don't think that the budgeting process varies across industries. It varies across companies and what approach a company or its leadership would like to take. And so I do think that you can use a lot of different processes, top down, bottoms up. You can give different roles and responsibilities and significantly different timelines. And it really depends on the approach that your leadership has established for the company, and not as much on the specific industry that you're in.
Oh, Sylvie, you're on mute, but could you add to that a little bit?
Yeah, I would very much echo those points. I think my experience is industry and also the size of the company, I think, changes a little bit the approach. I think some companies are very structured and publish their full budgeting approach, and others are a little bit more, I think for marketers, we have to navigate and understand it better by kind of just through relationship with finance. But I think fundamentally, the process of going from marketing plan to budget is, in the end, the approach I've always applied, no matter what the company. And then the planning, the financial part is different team to team, company to company.
Maybe we'll stay with you, Sylvie, and then go to the others for this question. I know you're going to talk about it more later, but how do CMOs and CFOs collaboratively evaluate a promising new technology? Now, it delivers conversion rate optimization and customer-generated analytics data, but it's promising. It's not proven, or it's not guaranteed. So how do you collaboratively evaluate a technology like that?
I think that's probably that's a very substantial challenge for marketers right now, and it has been in my career because, MarTech, marketing technology, is now very foundational to a lot of the digital marketing activities that we all have to run. Yet it's complicated to explain to non-marketers, is my experience. And so I think certainly the approach I've taken is really backtrack, because I think as marketers, we can go quickly into our own little world and we understand it. But I think in the process of elevating those asks, I think it's about almost like creating decks that are very explanatory and step back in terms of why we're doing this, what is it that we need to do, and what's going to be the payoff, and doing as good a job as possible in projecting what that will give us. We can't always go to ROI at that level, but we can go to, here are the functionalities and capabilities it's going to give us. And so that's been kind of my approach, is really working really hard to outline that in as simple a language as possible, and in a way that really, I think finance partners can relate to. So it's, I've done illustrations, I've done, a lot of, I think drawings sometimes help a lot. It seems basic and not necessarily catering to a financial mindset, but I think it really helps people visualize the marketing process and kind of the machine behind the actual marketing activity in the digital world.
So Laura, how is that for you? How do you evaluate when a big request comes in for a promising new technology?
Yeah, and I have really as many examples of things that have come our way specific on a marketing technology, but what I was thinking of as Sylvie was explaining that is, right, if there is something that's in the space that people are just fundamentally less familiar with, less comfortable with what it might mean, rather than, in terms of making a business case, rather than saying, okay, we think it will deliver X% lift and showing, a bunch of numbers, approaching things from a hurdle perspective, I find is oftentimes effective, where you don't need to say, we think it's going to deliver X. It's more of, like Sylvie described, if you can explain, where the types of information you're going to get, what types of value conceptually do you get from a product, and then if you say, and as long as all of these things together can deliver a 3% or better lift to showing that break even point, then people can sometimes get more comfortable saying, you know what, I get where this stuff can add value, and 3%, relative to past experience, maybe that's way too much and we don't think that's likely to be the case. Or, you know what, that doesn't feel like such a big hurdle, and yeah, I could see where we could get something better than that.
So Tatum, a different question, but similar. So this is related to strategic events that are really meant to create brand awareness. And how do you suggest proving the value to finance if the ROI of something like that might be well lower than any demand generation you could do instead?
I think the key there is to realize to me that it's more of a tide rising, and it rises, it helps everything else. MMM is a critical part of it. I think that's, we haven't done MMM at Bluestem in a few years, and we're actually just getting ready to get our next results for it. But I think the more you can show that interplay or interaction between the different tools and vehicles that you're using, because brand building does ultimately lift your other vehicles, and it should when it's done well. And so I think that's the key, is to be able to watch the metrics on everything else. Is your search going up? Is your, and really starting to dig into the response on everything else. For us, is catalog response suddenly better than it was before? Are we seeing more conversion at the checkout? And really watch all of the metrics, and that's where your brand building is going to, in small ways, incrementally start to lift, and then you tell the story in that way. But MMM is the best approach, obviously, and it doesn't happen immediately, but it's the best way to show. And I think you start your brand building small and then build in once you've been able to prove it out.
Hey, Tatum,
when you say MMM, what does MMM mean?
Media mix modeling. So it's there's several different types of agencies that you can work with. At General Mills, it's homegrown, but a lot of different agencies you can work with that will help you model all of your media, and then it essentially builds the return and where your media is working best.
So Kelly, how do you evaluate, maybe initiatives such as brands?
Yeah. So it brings a smile to my face when I hear a lot of people. There's a view of finance are the people who say no. Like, will finance approve this? Well, can you get it by finance? We're the stop sign or the gatekeeper. And really, what the finance's role is kind of has evolved over the years since I've been in the role. It's really, finance really is making sure that we have the right assets, and that's people, technology, liquidity, and are we deploying them in the right places? And so finance wants to spend money, but we want to spend money in the right places, right? And so I just want to make sure that we're all level set, is we don't always want to cut costs and keep as much in our bank account as possible. That we really are looking at making sure we have the right resources, like the technology example that you said, or the right people. Do we have the right people on board to drive some of our initiatives? And then are we deploying them in the right areas or spaces or initiatives, right? And so I think one thing that's really important is to keep that in mind and make sure that you partner with your finance person and make sure that your finance person understands what key initiatives this investment supports. Usually a company, when they're going through the strategic planning process, they will name a top 3 to 5 initiatives of the company. It may change from a little bit from year to year, but usually they're pretty solid. And so make sure your finance person aligns this investment with one of those top initiatives. So that helps kind of get their head thinking in the right space of, okay, this is what I'm going for at a very high level. Next, I think, is kind of get that your finance person aligned with what is the goal of this initiative. It's just, everybody could know, like investments in brand, it's just a good thing to do, right? The tide rises. But also really challenge yourself to say, what are the outcomes? Is it something that is going to help us from a compliance or legal standpoint? Is it a keep the lights on type of project? Is it going to help us grow the business, or is it going to help us cut costs? Kind of help your finance person put it in the right bucket. So from a very high level, what strategic objective does the initiative support? Then the next step is, okay, what type of project is it? Because those are categories that we start putting all of these initiatives in when we get the list. We call it the Christmas list. That's about 20 pages long, and you can only get, fund about a half a page. That's what we start to do in our first funneling process. So help your finance partner really categorize and understand how this initiative cascades from the very highest strategy down to what can it deliver.
That's very good advice. That's fantastic. So let me check. Chris, are you with us?
Yes, sir.
Hey, I love your perspective, and yeah, thanks again for sponsoring today. But and congratulations on all the success you had in 2020. What a year it's been.
Thank you. I've got a couple of slides I wanted to share just real quick with you guys, if you can give me permission.
Yeah, I think you should be able to share your screen as a panelist.
Gotcha. Coming through?
Yeah, definitely.
Okay, so I just wanted to make a couple of points. I love the conversation that's going on. And as an agency, to weigh into this conversation, we have to have a lot of conversations with our marketing counterparts and enable them to have conversations with their finance partners. And so, the old, is this a budget that we're asking for, or is this an investment that we're trying to make? And so the notion of if marketing is going to always be asking for budget, it's kind of going out there and saying, if I build it, I hope they come. And finance typically says, I'm going to need a little bit more than that. So a few years ago, as an agency, a marketing agency, we've always been tuned into relevance in terms of what we do with our marketing programs for clients. But what we really set out to do is to attach our efforts to the revenue of an organization. So we changed our tagline. We changed the way that we approach working with clients, the way that we approach modeling, all around this relevance to revenue formula. And I just wanted to share that with you because I think it's something that you all could use in your organizations as well. So when we talk about our contribution to revenue, marketing and an agency's contribution, we typically break it down into three aspects: revenue opportunity, revenue readiness, and revenue realization. Because each one of those are different types of revenue that we are contributing to the organization. For revenue opportunity, it's things like market expansion, cross-sell efforts, or brand campaigns. Typically, it's more blue sky. We can't necessarily define exactly what we're going to deliver to an organization because it's never been done before. So we're going to create revenue opportunity. And the only way that we can help finance understand the impact of that is to extrapolate past results and some benchmarks and convince them that this is an investment based on a vision. All right. So when we talk about that, it's revenue opportunity. When we talk about revenue readiness with clients, we're typically aligning to things like product launches, sales enablement, trade shows, and events. So these revenue readiness is a little bit harder to define, but it's necessary to support for an organization. And the reason why it's hard to define is because attribution is difficult. A lot of times product launches have to go through a channel of distribution. Trade shows, you don't necessarily are able to close the loop on all of those things. And so typically investments in those efforts are based on some percentage of a budget, and it's a bottom-up budget where somebody's saying, you know what, we're going to spend, $500,000 or whatever to support a product launch, and Marcom gets a percentage of that budget. It's a 10% of that budget or whatever it might be. And then the last category, revenue realization. This is the most tangible. These are your demand generation efforts, digital marketing, website optimizations, or redesigns. Like I said, it's more tangible. We can actually put a return on ad spend modeling approach to this, and an investment can be shown to be based on an ROI model. So I just wanted to share those 3 ways to think about marketing's contribution to revenue, and how our agency approaches that conversation between the marketer and their financial counterparts. Thanks a lot.
Hey, thank you, Chris. That's wonderful. Yeah, very, very nice way of approaching it. So let's pass it on to Kelly and Sylvie and have a similar fireside chat, but just from their perspective. And I know we'll be getting more into, how to improve brand initiatives and marketing technology. So Sylvie and Kelly, take it away.
Yeah, so Kelly, I think you've already kind of answered some of the question around that, but obviously, the first step is to make sure that as marketers, we never tell our finance partners how much we love to spend money, because that should be always a hidden secret, and we should always have a lot of strategic words instead. But Kelly, on a serious note, in terms of, obviously having led, just coming off a big rebranding with, just a large ticket item. And, to Chris's point, a second ago, hard to substantiate from a pure data perspective and a results perspective, a lot harder than, a demand generation campaign and other digital marketing that we can now really measure. What would be, if I was to show up in your office with that initiative on my hands, what would be your recommendation for me in terms of my approach? How would you see that?
Yeah. So this is having to do with an investment in brand. Is that correct?
Correct.
Sylvie? Okay.
Yeah, right.
So the first thing I would recommend doing is, us finance people love data. And getting grounded and on the same page that there's a need and that there's opportunity to increase our brand. So where are we at today? I've worked at companies where they've sent out surveys and asked different companies of, have you heard of our brands? And so things like that are tangible, try to make it tangible, where you have surveys done, you've gotten some type of outside in view, letting us know that there's a need, right? And so let's get a baseline agreement that there's a need. And then secondly, it does dovetail a little bit on what I said before is, okay, to accomplish one of our top strategic objectives, or fill a gap that we have today, how is brand going to help us? So connect the dots with brand. So for example, if we are going to grow in a certain geography, and that's a strategy where we're going to expand organically through geographic expansion, tell me what you're going to do with the brand to help that specific initiative. So just help connect the dots. That you're going to focus those brand initiatives in a certain area that really ties in nicely to an overall strategy. And then I would say, if there's any way possible to set up a project plan, is there any way that you can test it? And so can you test and do before and after? And try to, there may not be direct correlation, but there can be correlation that you can establish. If you can do some type of brand initiative in a certain geography, measure the before and after results, and kind of dip your toe in the water to help finance get more comfortable that this is where we want to deploy more resources or more assets to expand our brand, and that it can help our overall strategy of the company. And then I'd say, for your initiatives, make sure you set up gates. And so everybody likes there to be opportunities to raise your hand, reassess, set up gates where you say, okay, after this step in the process, we are going to take a step back and reassess. Are we still on track to spend just this amount? Are we looking like we need to expand it? Is there any type of adjustments do we need to make? Or take a look at any type of testing results. So definitely, if there's an opportunity to do that, that'll increase the comfort level if you do establish those gates.
Yeah, and just to tag on to what you're saying, Kelly, I think that feels very much in alignment with what the experience I went through in terms of, I think that there is, to some degree, always a way to measure. And, sometimes it's not, immediate data, click-through rates and whatnot, but it is, brand awareness, research, to have some current state assessment and then have a sense of where we want to go. I think I found is really helpful. After we complete this effort, we anticipate to be at that place around that metric has been something that's been really helpful to me. Is there any particular, so with brand, it's actually the testing concept is difficult, to be fully candid. And so in terms of what is the time frame that you would need? Do you need time? Is there a time where would you rather have, I guess, the marketing person engage with you really early in that process, the second the idea comes to mind in a way based on what they have seen? Or at which stage you want to be engaged around that, an effort like that?
A lot of companies, it really depends on the size of the company. We will have an FP&A, financial planning analysis analyst, kind of really that focuses on our different functional areas. So there should be a marketing person, FP&A marketing person supporting that function. I would say bring that person early and often. That person should be sitting in your weekly or monthly meetings and really have their finger on the pulse of the different ideas or initiatives and things that you're just in the infancy stage of thinking about, because that partner can be thinking in their head, okay, if this is some place that we really feel we want to invest in, that person can be brainstorming and leveraging their experience at other companies and leveraging their experience of elevating an initiative that's less measurable. That person can be brainstorming on, what can I get here? What's something tangible I can do? How can I connect this to an overall initiative? How can, so that person should be thinking on your behalf and providing you recommendations of what you can start to look at very, very early on in the process.
Thank you. Follow-on question. Because, in the case of rebranding, it's a very visual experience that we're delivering. I have found that even though my finance partners are not marketers per se, I think it's part of this taking them along for the ride concept that they actually want to see some of the work, and it does help them think through it. Is that something that you would echo?
I would absolutely echo that. They would love to see and be exposed as much as possible with brand, because that's something a little bit less tangible, like you said. So the more comfortable you can get your finance folks with the concept of brand and the payback of brand and what it can do for the company, I think the better off you are. Absolutely.
Now show your work, right?
Yeah, show your work. And also one thing a good finance person can do for you is you may be looking at as an initiative to invest and grow. That finance person could be thinking in the back of their head as you bring them on early in the process, do I have cost savings also that you may not be thinking of? Can I reduce spend or reduce costs in other areas by consolidating? Can we use this as an opportunity to consolidate brands? Can we do some certain write-off of intangibles? Can we just think of all of those things that may be downstream benefits or costs? They should be bringing that to the table when you're bringing your ideas to grow the business.
Yeah, Kelly, I wanted to catch something that you said earlier, which I think is really important, which is, really thinking, and it touches on kind of the relationship and the way I've certainly evolved as a marketer in the way I view my finance partners in terms of the evolution toward people who are going to say no to everything I want to do, to truly thinking of your finance partner, not as finance, but as truly strategic partners. and really that help you think even through the way you want to flow the project. You know, there's sometimes limitation year to year, and there's a give and take and a thinking that happens. I think that the more, to your point, the more finance is engaged right by your side, they really are your partner in crime to make this happen. And I found, you know, a really positive, that to be a very positive experience. So thinking of them as more strategic partners than just pure finance, I guess. More question for you. So we're going to move off the rebranding piece a little bit and talk about the other side of some other projects. Clearly, as I said, I love to spend money. So marketing technology, technology is really costly for a lot of companies, right? And it is kind of this dark, confusing little world of a bunch of, it's this machine with, you know, it's like data flowing, and we need to buy big products that are intelligent and talk to each other and are integrated. How do we approach that world with you in terms of, and they are, you know, as I said, often substantial investments as well. And I would say, with one more point before you answer, Kelly, is there's often involvement from IT in that process, right? Information technology is a big part of it. It's a partnership often between marketing and IT to make those projects happen. So can you comment on the financial approach to those from your perspective?
Yeah, I would say keep it simple. And so it can be pretty simple where we don't need to know everything that's in the black box, but we can know and should know the things that are measurable out of it. And I think with technology, a lot of people think it's not measurable. I think there's a lot of opportunities to get measurable data out of technology investments. And so you have click-through rates, conversion. So get your finance person really engaged with your data that you have with your current technology. See if there's any way that you can get any other industry data or data so we can have an outside in view to help us identify that there's a big opportunity. There's a big gap that we feel like we should close. So yeah, keep it simple. We don't need to know everything in the black box. Get us engaged with what are the good metrics, and look for opportunities to make that first investment smaller. You know, I've worked at companies where what we've done is we've launched something on a test basis, and it might be really hard because you have to actually write a checkout to have the software to test it, right? But not always. Sometimes you can do a low-tech introduction of what and simulate what that software is going to do. And you can launch it and do things manually. And your investment is the manpower to do things manually and to simulate what the impact would be of doing that process manually and showing that you have higher metrics, you have higher conversion or average order value, or before you make that big investment in buying the software and having that process automated, right? And so look for opportunities to do that, to start out with a little investment, low tech potentially, to help kind of build the awareness and build the validity that the investment is going to pay off.
Cool. That's certainly resonates with my experience. And thank you. Those are all fantastic tips. One more question around that. Do you feel that, so one of the things I've discovered after, you know, going through the process of asking for funding for those type of large investments in MarTech is also just the need for a roadmap. And I found that really bodes well with the IT teams as well, just because they, you know, obviously often IT these days is pretty packed with projects, and it really helps them map their project. How do you feel about that? And do you have any thoughts on, you know, any tips on how to build a good roadmap around those projects?
Yeah, absolutely. And you bring up a good point. It is very important for investments in marketing technology to become grounded and aware of your IT department's investments across all functions. So become aware if they have a roadmap to completely redo a certain platform or an initiative that's going to change a lot of things, and look for opportunities to dovetail off of that, right? If IT is already lifting up the hood and making changes in a certain area, it may be less costly to time your marketing IT investments with that. So make sure that you understand how it can fit and does fit your technology investment in the whole roadmap in IT. Look for efficiencies, and like I said, look for cost savings. And so even though the main objective of something might be to grow revenue, don't be blinded, or don't turn off the blinders on trying to identify, are there cost savings? Are we going to be more efficient? And what other positive impacts can you include in your business case?
Yeah, those are all, again, all great points. One thing I've found just is that it's really helpful to think about those hidden costs in marketing technology, because I think as marketers, we get, pretty excited about what each tool can do. So we have kind of usually a marketing automation tool that's central, and then there's a bunch of add-ons, and it's just all candy to us. We get very excited, but I think we have to think about the implementation cost, the integration costs around those tools into the other tools, and then the maintenance from an IT perspective of those tools. And I think there's a lot of hidden costs around that that I've certainly discovered, when I was at Prime Therapeutics, standing that up from scratch over a 5-year period. You just keep evolving and keep adding, and God knows there's new tools every minute. So we're all very excited about all these new nuggets of data we're able to acquire to better target our audiences and optimize and whatnot. But I think I would just, be thoughtful of, sometimes keeping tools in the same family of vendors helps with that, like buying products that are native to, let's say you're in, in an Adobe environment, you keep it in that family. If you're in Salesforce, trying to minimize those integration, I've found those very costly, and the implementation is sometimes not as easy as we think. So, so pivoting from there, I want to talk about what do you think has changed lately in terms of the relationship between, finance and marketing. We're obviously in a digital era. We didn't used to have as many data points in our tool sets as marketers. Do you feel that digital age in marketing has changed your relationship with your marketing partners?
Absolutely. With things being more digital, there are a lot more opportunities to actually measure the impacts or the results. There's a lot more metrics than I think that there used to be earlier on in my career, that we can lean on and leverage to determine where our best investments are. And we've already covered on it a little bit of making sure marketing is so intertwined with IT, and making sure that your finance partner, it really is your business partner, and really sits in a lot of companies I've seen, is really sits on your leadership team of the function.
All right. I'm going to move a little bit because we're getting closer to the end of this. So I want to make sure that you get a chance to address, a very hot topic for all marketers, I'm sure, right now, and finance people. COVID-19, very omnipresent in our lives right now. How would you, what is the budgeting approach around that? Is that changing, do you think, the way finance is looking at projects that are coming through their desk these days? Can you comment on the impact of COVID-19 to the finance function?
Yeah. It really depends. I mean, there are different industries that are more impacted than others. But for the most part, COVID has really had a big impact on the liquidity of companies. And so there may be, for the most part, less dollars to invest, right? And so I think there's going to be a lot of efforts in figuring out where you can invest to become more efficient and effective. And so I think there is a heightened focus on investments that save money and are more effective for the business. Also making sure that taking a look at what did COVID do to your customers? Did it change the channel that's most effective to reach your customer? Has the channel changed? And how are you, from a marketing standpoint, addressing that channel? Is there a big gap there? Is there opportunity and an investment that you need to make because of COVID, because people are moving to more of their purchases online versus brick and mortar? But it really depends on your industry, and you really have to become aware of how COVID has impacted the actions of your clients, and how could it have impacted the channels that you operate in.
Thank you. One final question for you, Kelly. In terms of the, we've been talking a fair amount about obviously all these large ticket items, big investments, and obviously with COVID prioritizing, more on the basis of the elements you were talking about. I've had to put together a fair amount of business plans in my life, business cases to obviously convince not just, finance, but the organization about moving forward with an initiative, a large initiative. Mm-hmm. Are there any elements in a business plan format that you think are really important to have? Specific metrics, or just what are sections that matter and that are key to a successful business plan?
Okay. Obviously the amount of investment, and so how much diligence that has been done on how much you think something is going to cost. And so I've had some business cases brought to me where like, it's going to be between 1 and 5 million. The more that you can narrow down the amount that it's going to cost and have support, whether it's quotes or bids, the more detailed estimate that you have for the actual cost, that lessens our view of the risk that we're going to have something that's going to be that you have to keep throwing money at, right? That alleviates that risk. And so the more support that you have and due diligence that you've done on what this investment's actually going to cost, the better. And I said, absolutely start there. Secondly is aligning, like I had said before, aligning that investment with a strategic initiative of the company. That's incredibly important. And really making sure you're capturing all the benefits. Are there going to be benefits of cost savings, growing revenue? Is it going to help you from a legal or compliance standpoint? Trying to capture all the benefits and not just focus on what you feel is the biggest one, but making sure you're capturing everything. Also making sure that you have a good understanding of where your project fits in with other projects. And so knowing that on the leadership team where hopefully all the different leaders of the functions get together, getting an understanding of what the overall needs of the company are. It will help you assess whether you should go for this huge project, or really is there a project that's very large that is more of a burning platform that the company needs to invest in, and really understanding that and adjusting, hey, you know what, maybe I can't ask for this large initiative this year. There's something more critical to the business overall in a different functional area, and readjusting to maybe you have to prioritize 2 or 3 smaller ones.
Right. Thank you. Kelly, I want to tag on to that a little bit from a marketing perspective in terms of, things I've bumped into and that I've found ways to improve on as a marketer. in both my relationship to finance, but also in the case of, building a business case. I touched a little bit on that at the beginning, but I think the language we use is really important. And I think speaking in terms, banning acronyms, for instance, is one of my rules, because I find that, very often the acronyms that I know as a marketer may not be known by the rest of the company, just because this is my universe. But I shouldn't assume that others know those particular acronyms. So really speaking as much as possible in plain language in terms of being clear and simple in the way one articulates a business case, I think has really been something I've learned along the way to be much more effective. And then the second point you made, I think, is a really excellent one, which is, just specificity and details, and going as far as one can in terms of, showing kind of proof points to what we're trying to do to the extent we can, and getting as detailed as possible. I think the finance mindset is a detailed one. And there's just a sense of people have really thought through what they're proposing if they have more details. So that's just a few nuggets that I've learned in my career in interfacing with finance and presenting big business cases.
Absolutely. And really being able to explain to a non-marketing person really what the goal and the benefits are of your investment, because your finance person, your FP&A person is going to be speaking on your behalf on various occasions, in supporting your project and pitching your project, right? In prioritization discussions. So the more you can get your finance person knowledgeable and be able to answer those next second and third layer of questions, the better you are positioned to get your project on the list.
All right. Well, thank you so much, Kelly. Edwin, I'm going to pass it back to you.
Yeah, thanks. Thanks, Sylvie. Thanks, Kelly. That was a wonderful chat. Really, really helpful. Kelly, just a quick question for you. The advice you shared, would that advice differ if you talk to a marketer in a small organization or in a large organization, like you were at a Lux, for instance?
Mm-hmm.
Does it differ, the whole budgeting process and how you work with marketing between sizes of organizations?
The process doesn't. The amount of time it takes will be less with a smaller organization, right? You're going to have naturally more collaboration with a smaller company. You're probably going to be better in tuned or more in tuned with what's going on in the IT department or in the various other functions and the businesses. So I think it's going to be just a little bit shorter time frame and more efficient. But overall, no. A smaller organization should follow the same high level process and get grounded in the same points that I just discussed.
Yes. So Laura, you mentioned, the Bluestem Brands is very numbers driven, and so you'll probably see numbers coming from marketing all year round. Are you looking for different types of numbers during the budgeting process, or is it very similar to what marketing brings you at other times in the year?
Throughout the year, it's really more around kind of incremental decisions and trying something different or where they're sharing results of something that they've looked at a test and control. And there you're looking at kind of, all of the metrics, that specific initiative is doing. You're looking at things like conversion and average order value and response rates and all of that type of stuff. During budgeting, we don't get into specific initiatives at that level of detail. It's really more the kind of buckets of spend and how they're changing year on year, and how that aligns to where they're longer term trying to shift, for example, dollars between digital and catalog, and understanding where they're making trade-offs and what that overall pool of spending means from a marketing efficiency year on year. And we give them really a lot of latitude to kind of play within those walls during the course of the year, that really the budgeting is committing to kind of an overall level of profitability, and you learn new things every day and find what's working and what's not, or discover new things. And so that becomes much more kind of fluid during the course of the year.
Nice. And Sylvie, I think what's resonated with the audience was certainly not only that you created a good relationship with finance during marketing technology investments, but also with IT. Do you have like an example, maybe going back to your time at Prime Therapeutics, where you implemented marketing technology, and then how did you get that accomplished?
So, I think much like finance, the relationship with finance, the relationship with IT is also a pivotal one. I think that there's sometimes a gap of understanding around, the way marketers think about, the marketing activity, I guess, and the IT activity. And I think that very often what I found, certainly, and that's been pretty consistent in the past, I would say 15 years, is IT departments just have so much coming at them because there's so much technology, right? For everything, every department requires technology. And so I think, just really having a building that similar relationship around priorities and justifying those priorities has been really important to me. So, standing up marketing automation at Prime Therapeutics, what I worked on with IT is being very thoughtful of having, requirements really pinned down as much as possible before showing up, and then refining them and making them part of the process with me to get to a product that they felt they could deliver in the time frame I was asking about. So, prioritizing certain features, and it's truly just kind of, it's a very important partnership of give and take. And I think flexibility as well. So just like in the finance world where all the money is not sitting in 1 year, it's really important to create roadmaps with IT and to, have a multiple year project versus 1 year. It's very rare when big projects get done in 1 year. So it's really just kind of a little bit taking Kelly's, philosophy around testing and starting small and then building on it. I think that resonates really well with IT, and then just being selective of what features do I really, really need to have right now that are going to move the needle, and then what are some that are nice to haves that I can, delay to later. So I would say that that's been my approach, is a close partnership from that perspective.
Yeah. Anything to add to that, Kelly and Laura?
No, I agree. Absolutely agree.
Great. Well, I want to thank all of you. This was just wonderful. Really great format, and I'd like to thank Susan Peterson from the board of the ANA for that, because she came up with it, and I really liked it how you interacted, and I think everybody got a lot out of it, and I appreciate your time this morning, and the audience too for spending time with us, and have a great holiday season.